What's up, traders? Welcome to Smart Edge FX. Okay, my name is Matt Obata. All right. Um, if this is your first time of coming across my channel, please subscribe and hit the notification button so that you will be notified whenever I release any trade setup on my channel. Okay, I will be dropping a Telegram channel link where you can subscribe also to get notification whenever I send any trade signal on my platform. Okay, let's get straight to the chart. Okay, let's get straight to the chart. I want to share with you what I have in USDJPY. Last time I analyzed this pair, uh, I basically I'm basically interested in USDJPY currently because you see the Bank of Japan hiked rates. Okay, they hiked rates, but they didn't meet the market expectation. All right. They didn't meet the market expectation. They hiked rates. They didn't meet the market expectation. So it is a very, very, very disappointing one for the market. So you see, the market does not actually follow the headlines. All right. These big money flows don't just follow the headlines. Okay. They follow the yields. All right. Currently, even the Fed has more yield than the BOJ. So that typically means the carry trade continues. There are more yields in the United States of America than the BOJ. Okay, so the market currently is fundamentally bullish. Like I said last time, we should be expecting the market to get to this top. All right, and we were expecting a pullback. Like I said last time, we were expecting a pullback, and I said if we get a pullback, we should consider getting into the market, and we've gotten that pullback. Though we've gotten that pullback. All right. So I said, if you've not joined this market last time on my previous video, you can wait for retracement around this area for you to join the market upwards. Where is the target for this market? Please let me clear this chart so you can see very well. Let me clear this chart. Let me clear this chart so you can get what I mean. All right. You see, my methodology of trading involves trading the fundamentals and the technical, combining the fundamentals and the technical analysis. You understand? I just don't put my focus on purely on technical analysis. It doesn't work that way. If you trade that way, you're gonna be this market. Wow. You have to know the positions of the fundamental. Okay, what are the institutions doing? What are the big guys? What are the big players doing in the market? How are they positioning themselves? You can catch these guys, their positions and where they are in the market with your technical analysis if you know how to apply this very, very well. How I'm going to be teaching on this channel, how to apply Fibonacci to pinpoint entries and exits. Okay, we are not trying to predict we are not trying to predict the market. We are trying to react. We set up our plan and we react. And now we are about to react. Why do we want to react? The reasons are one, because the Bank of Japan hiked, but there was it was not a hawkish hike. You understand? It has already been priced in. It has already been priced in. The market has already been priced in. The hike has been priced in. There is nothing new. Assuming they hiked and they assured the market of continuous hike, they are going to continue hiking, but it's going to be a gradual one. So we don't know how they are going to do this. But currently, the carry trades carrying. And for those of you who don't understand what carry trade is borrow JPY, buy USD. Okay. You see, the smart money They borrow JPY and buy USD because of the use. Okay, the United States use is much more attractive than that of the BOJ, even though they hiked. So, and now currently on the chart, what we have here on the 4 hour time frame, on the 4 hour time frame, on the 1 hour time frame, what we have already, we have already determined the context. If you don't know what the context is, please watch the previous video. Okay, we are bullish on this currency. That means we only want to buy. Okay, we only want to buy. But what will change our perspective on this currency? What will change our perspective is, like I said previously, it will be a close. It will be a close below this low. That will be the invalidation point. Because look, no matter how sure you are with your trade, no matter how accurate, no matter what system you trade, you must have to make use of proper risk management. I can't stress that enough. Okay. It is very, very important. That's what keeps you in the market for a very long time. You cannot trade without proper risk management. It's very, very important. Okay. Manage your risk, know your invalidation points. There should always be ifs in your analysis. If this happens, I do this. If this happens, I do that. You don't just get glued, even though we are expecting the market to move up. And then what happens if it comes down? Yeah, there is higher probability that it's going to move up. Yes, we are working on probability. We're not kind of trying to say, okay, this analysis is going to move up. It has no any other way to go apart from moving up. No, it doesn't work that way. No matter who you are, no matter how you trade this for, no matter how you are into this business, I don't care how much you have made. There is no any sure setup. Okay, there is no setup that you are sure 100% that is going to be a win. It doesn't exist. Okay, but we have an edge, and that's what we're working with. We are working with an edge. Okay, we are working with an edge. We have an edge in the market. And what is our edge? Our methodology of trading. Because we put some important things into consideration before making any trade decision. Okay, all right. So please make use of proper risk management. And for your information, this is only for educational purpose. All right. It's not any investment advice or any signal for anybody to buy or sell anything. This is strictly for educational purpose, please. Okay. So please make use of proper risk management. Okay. On the daily time frame, like I said, the invalidation point for this setup will be below this low. The moment this market goes below this low, okay, I will sit back and watch what the market is doing. Okay, I'm going to watch and stay away from the markets and understand the market, what's going on. Okay, so like I said, we've gotten the pullback that we needed. We've gotten the pullback that we needed for a long entry. Okay, we've gotten the pullback that we needed for a long entry. So here I and now, why are we getting in here for a buy? Why are we buying at 156.0, 156.10? Why are we buying from here? All right, I will tell you what we're buying, guys. I will tell you why we are buying from here. For those who missed the entry around here, you can rejoin the market now and target this high. Sorry, please. Oh my God, what's wrong with me? Okay. All right. This is it. This is it. Okay. We can target a little bit much higher, but no, let's just exit the market here. Then we can evaluate our stance on the market and know what to do next. Because, like I said previously, that we are expecting the Bank of Japan's intervention. Because previously, around 2024, they intervened around 158.85, somewhere around that region. They intervened. You understand? So, the moment price pushes up to that level, there is this risk of Bank of Japan intervention in the market. So I don't want to be going up to that level. So if we get this move to the upside from this place, from this current place right now to this place, this is not a scalp trade. Whenever I'm getting up a scalp trade here, I will put it up for you guys. This is much more like a swing trade, okay? This, but if you're a scalper and you get a good entry from here, that's a whole lot of pips that you can take on the upside. That's about 163 pips, okay? That's a lot of pips to the upside. You get it. So it is a nice area for a long entry to the upside because we expect the market to push up to somewhere around the 158.85 area on the long side. So please, if this is your first time of coming to my channel, please hit the subscribe button, hit the like button, and don't forget to subscribe, please. Do not forget to subscribe. By so doing, you will be seeing more of this on a daily basis. On a daily basis, you're going to be seeing this. I will be posting it. I will be showing you guys places that we expect the market to react. We project. When we project using our fib levels to understand places that we expect the market to react. Let me show you something on the 4-hour time frame. Let me show you something from the 4-hour time frame. Uh, okay, okay, 4 hours. All right. If you can, let me take this out. All right. Take this out. Okay. So at this point, what I don't want to see on the 4-hour time frame is shifting of the market to the bearish side. Take note of this, okay? This will be an early sign that the bears are about to start taking control. Are you getting what I'm saying? You see, this is an MXCD. Okay, this indicator here is an MXCD. Just much more like the traditional MXCD that you know, but this is the MXCD predictor. Okay, so that is my gauge of trend. Actually, I use this engaging trend to know what is the trend on that specific time frame that I'm looking at. Like currently now, I'm looking at the 4 hours, and the trend on the 4 hours is bullish. Yes, but price action is bearish. The trend is bullish, but the price action is what? Bearish. So what I don't want to see here is shifting the trend to the bearish side. I don't want to see that. If the bulls are still in control and want to keep taking this market to the upside, it should still remain bullish on the 4-hour time frame. Okay. Shifting the trend to the bearish side on the 4-hour time frame is an early sign that the bears is about to start taking control. So we don't want to see a bearish trend now on the 4-hour time frame. Okay. So if you check by this fall, this tanking, how this market has been moving from this top to this bottom, you can see this huge candle. That's a very huge candle. Okay. So if you don't trust your methodology, if you don't trust your method of analysis, you can think this market is just falling from here now and you start selling from here. To be honest with you, I don't want to be selling this market from here. I don't want to be selling against any stock grabbers on the charts. Okay. I don't want to sell against any stock grabbers. So I want to trade along with the stock grabber. So if I'm wrong, that's fine. There's no problem. If I'm wrong, I will evaluate my trades and get into the markets. Okay. You don't try to be rigid about the markets, trying to, you know, impose yourself in the markets. No, you don't do that. We follow what we see on the charts. Okay. You follow what you see on the charts. You trade what you see on the charts. Okay. So if you're not on this trade, this is my own entry. I got into this market somewhere around here. That was last week. I got into this trade somewhere around here. And I said, okay, if you've missed the trade, wait for retracement. And now we've gotten the retracement. This is the right time to buy USDJPY. This is the right time to buy. Then if it takes us out from here, that's fine. There is no problem. We reevaluate and come back stronger. Okay? That's what we do. We trade with an edge. And the edge that we have here is putting fundamental analysis with technical analysis by making use of fib levels to understand where to get in and where to get out. Okay? Very, very important. I if you For those of you who know chart pattern, of which I incorporate into my trading as well, this is an invert head and shoulder that we have here. Okay, if you check, this is the left shoulder. This, let me check out this indicator so you can see this chart clearly. This is the left shoulder, this is the red, and this is the right shoulder. Okay, and if you can see clearly from this top, from this neckline, we have this upper triangle that is up here. Okay, all right. Now, some people would like to get into this trade after the break of this top. Okay, that's okay. For me, at the break of this top, I should be adding to my position if I want to, because I might have already breaking even around here. I might have already breaking even. Okay, so if there is a break, there is a retest, then I can join again and add to my position to the stop. That's part of trade management, which we are going to all do together. The moment this trade picks up, we are going to monitor this trade. We're going to monitor this trade and see how it goes. Okay, so please, if this is your first time, subscribe and like. See ya on the next video. See ya on the next breakdown. BTC USD is on the way. Okay, I'm going to do a proper, both fundamental and technicals on BTC, just for you guys. So just wait as I put it on together for you tomorrow. See ya. See ya. Catch ya.